All right, just think about this. The average American has about 12 jobs throughout their lifetime. On top of that, they say about 65% of the U.S. is actively searching for a new job at any given time. So imagine leaving behind money every time you're going to change employers. Retirement expert Cory Sickles of Safe Harbor back in this sponsored segment with a little advice on rolling over that 401k. So good to have you, Cory.
Glad to be here, Robin.
I feel like we've talked about the importance, obviously, of 401k, of making sure you're getting that money right, but maybe not so much the importance of making sure you're keeping track of that, right?
That's exactly right.
Does it happen a lot that people lose track?
It does.
Yeah?
I mean, I think the most I've actually had a client roll over is maybe 8 or 9 of them.
Okay.
But yeah, it does happen. Just like you just said, people have more jobs. So as you have more jobs, it's easy to lose, forget about it.
Yeah.
You get the statements in the mail, you move, things happen like that. So I think it's very important that, if you do move or to another job, I think it's important to be able to take that 401k you have, take control of it and place it into your own IRA.
And that's the thing. If you kind of just leave it, it's not as if the money's not going anywhere, but you have no idea what the investments are doing. You have no control over what's happening with it, right?
That's exactly right. And here's one of the other things. When you do leave it there, sometimes what happens is then it goes from one company to another company to manage. You could be on Fidelity today, T. Rowe Price, then it goes to Principal, or who knows who it goes to.
Yeah.
And sometimes what happens is they move it to cash. So if you leave it there for a long period of time, you might not make anything based upon market performance as well.
And you talked about, switching it over into your own account. Is a Roth account a good thing to switch it into? We hear that word, and many people may not realize what the benefits are.
Yeah, so if you actually keep it in a 401k, then you cannot convert it over to a Roth.
Okay.
So the only way that you can do that is if you take control, move it to your IRA, and then I would highly recommend you work with a CPA or a financial advisor like ourselves, like myself, and we can then say, does it make sense to convert that to a Roth IRA? Just like, we've talked about it on the show before, an IRA or 401k, it's going to grow. You're going to pay taxes on it when you withdraw it. A Roth IRA, you pay the tax once, and then it grows tax-free, until you actually use that money.
Is it difficult? Is it a process for somebody to roll that 401k over? Why is it that people don't seem to do it so often?
Well, I think one part of it is maybe they don't know what to do.
Yeah.
Right? So I think, yes, there is a process in order to do that. One thing you want to do is, I highly recommend you work with an advisor. We're going to make sure that when you roll it over, there's no penalties. It's going to go what we call trustee to trustee, from company A to company B. It'll still be in your name, but there's no tax consequences on that. If you don't do it the right way, you might pay taxes and you might pay a penalty.
Can you just cash your 401k out too at that time?
Well, if you cash it out, depending on your age, if you're under the age of 59 and a half, not only do you pay taxes on it, everyone will pay taxes when you cash it out, but you also can have a 10% penalty because you're not of retirement age.
Okay.
So the main thing is to be able to probably, again, work with an advisor to make sure that you don't have to go through that unless you do need the cash. And there are some exceptions where maybe you don't pay the 10% penalty. And they've kind of expanded that over the last few years, but it's only usually for a certain portion of the money, not the entire amount. So again, if you work with an advisor, we're going to be able to make sure that you don't pay any taxes or penalties if that's what you really want to do. Right.
And then what about for those who maybe work for an employer who doesn't offer a 401k, or they're self-employed? What is your advice for them?
Well, one would be I think you should be able to contribute either to a traditional IRA, right? So it's the same thing as a 401k. You're limited what you can put into it on an annual basis. Or what you can do is you also can contribute to a Roth IRA. Again, the difference on that is, you're putting after-tax money into it, and it grows tax-free until you utilize it for retirement.
Okay, I think one of the important things that you mentioned, Cory, is that, a lot of times we don't know this stuff, or it's
right.
overwhelming or confusing to us to maybe have to go through this. So how can someone get in touch with your team and kind of get that process started?
Well, there's a couple things. One, you can visit our website at safeharboroh.com. And if you go to it, we actually have a link on there that says Avoid 401k Mistakes. So you can click on that. We have a brochure you can actually look at, but you can always give us a call at 614-760-0670. Schedule a complimentary meeting. We can meet in person in either Dublin or Easton, or we can even do a Zoom meeting as well.
Okay, all the information up on screen as always. Cory, appreciate you being here.
Thank you, Robin.